About FX, joining me is Simon Derrick, Chief Currency Strategist, Bank of York Mellon. Hi there, Simon. And let's start with emerging market currencies and what interests you most on the back of the round that we're seeing.
Okay, I think one of the fascinating things to me is you could make a perfectly reasonable argument that what's happening over the last 12 months is a lot of the pressures that have been within the currency markets over the last decade, so easy monetary policy in the United States, extreme currency policies in quite a number of emerging markets have finally started to ease. And as those policies have eased, you've started to see a process of normalization, if you like, in the currency markets.
Yep.
What I think is really fascinating is that the currencies that are coming under pressure now are almost exactly the same currencies that were under pressure prior to the start of the currency wars, if you like, prior to 2002. Once again, it's the ruble. Once again, it's the Turkish lira. Once again, it's Brazilian real. Once again, it's the Argentinian peso.
Yep.
So all these currencies that had underlying fundamental issues or political issues back in the late 1990s are suddenly the ones that are under pressure again as the tide slowly rolls out.
Which emerging market currencies are you long of right now?
I have to be honest, I would probably still go with those Northern Asians. I still would go with South Korea, I still would go with Taiwan. That to me still seems by far the safest bet because they are, to all intents and worlds, developed world currencies.
The Aussies had a nice boost on the back of this RBA dropping the bias towards easing.
Yep.
How much of a surprise was that? Well, I guess given the move in the Aussie, it was a huge surprise, right?
It was a surprise. I think, though, again, let's put it into context. If we're talking about the normalisation rates, currency moving more towards what you consider to be fair value. I think most people, and the RBA probably as well, would argue that somewhere between 83 and 86 is probably about the right price for the Aussie. So is it that surprising as we were getting close to that they would start to remove an easing bias and they would start to remove a reference towards an overvalued Aussie? Probably in retrospect, not. I think what's interesting, though, is we're getting those complaints about high value currency now more vociferously from New Zealand. That is still a long way from what most people would consider to be a reasonable value. Actually, I think you could also make a similar argument for the Canadian dollar.